Hey guys, welcome back to Father and Son Investing. A few weeks ago I did a video talking about whether sellers of Palantir stock might be short-sighted. That was taking a very long view of Palantir. Today I want to take a little bit of a more narrow view of Palantir to try to decide what exactly is Palantir's valuation. You know, the stock price has been coming down significantly to the dismay of a lot of people. Other people are like, fantastic, this is going to give me a great opportunity to buy this stock. So what is the actual fair value of Palantir's stock? This video is going to address that. Now, the answer to that question, what is Palantir's value, is not as easy as it might sound. There are lots of different ways for valuing a stock. Probably the most favored way to do that is something called discounted cash flows. We're going to go into that, but there are lots of other ways to value a stock. In addition, there are analysis tools that can help. There are quantitative analysis tools where one is using exact numbers, and there are some qualitative analysis which is a little harder to figure out. That involves knowing people, knowing brands, understanding what trends are, things like that. Lastly, there are some technical analysis tools that traders use to decide when to enter or exit a position. That involves looking at those charts, the candles, etc., to figure out where it looks like resistance is, where it looks like support is, volume, all sorts of different things that traders might use to figure out where and when to exit a stock. Now, while I said we're going to take a little bit more of a narrow view today, I'm not going to take so narrow of a view as to get into the mindset of a trader. I consider myself an investor and not a trader. Now, before we figure out what Palantir's value is, I wanted to talk just quickly about the discounted cash flow formula, or the model here. So essentially what we are going to be determining is what a company's cash flows might be for X number of years. Very commonly it's going to be 10 years. So if we were to do this for 10 years, this N out here would end up being 10. So what we're going to do is take the cash flows of a company and we're going to discount it back to the value of $1 today, understanding that in general the value of $1 today is going to be worth more than the value of $1 in the future because of inflation. So essentially the formula uses the cash flow, that's CF, divided by 1 plus the discount rate. Now you may be saying, well, what's the discount rate? Sometimes the discount rate that people end up using for calculations will just be the risk-free rate. But other times it's going to be the weighted average cost of capital. So you may see that abbreviated as WACC, and that varies for each different company. Regardless, it's that discount rate there that's going to help bring those future dollars back into the price of dollars today. We're going to use two websites today to help us with this. I'm not going to do all these calculations on the screen, but in the end, we're going to see that the two come up with different numbers, and that is in part due to the different assumptions that get made. That is one of the problems with discounted cash flow, is you have to come up with correct assumptions, and of course, we all know what happens when you assume. So this comes from the website Simply Wall Street. They use the discounted cash flow model to figure out what they think the fair value of a stock will be. So in this case, we have Palantir here on the screen, and they've done their DCF modeling and come up with the fair value of $11.31. So at its current price of more than 16 and just shy of 17, they're saying that it's almost 48% overvalued. What does that mean? They're saying that if you pay for that stock today, you are paying almost 48% more than what the stock is actually worth. Now that brings up the topic of fair value versus market value. We've just shown how we can calculate fair value using the discounted cash flow model, but market value isn't always going to be fair value. Of course, market value takes into account other effects such as the psychology of people, fear of missing out, or that a stock may be hot and therefore people start to acquire it even though its fair value is far less. Of course, there can be other things that affect the market value as well. Certainly, news on any given day, we have seen how that can affect the market value of a stock. All right, we're going to turn to another website. This one's called Macroaxis.com. They have also run some of their quantitative analysis. Now, they say on their site that they also factor in to their analysis Palantir Technologies' management style, its C-level domain expertise and tenure, its overall leadership history, as well as its current capital structure and its future earnings potential. So you see that they've factored in some other things there other than just discounted cash flow. Now, if we take a look at what they've come up with as the fair value of the company, we'll see that they say it's worth $15.22, and that currently at $16.34, the stock is still overvalued. So which one is it? Is it $15.22, or is it that $11 and change that simply Wall Street came up with? Well, that ultimately is the difficult question, is coming up with fair value. We've seen how that can be altered based upon the factors that get considered and the assumptions that are made. What I hope you've gotten out of this video is, number one, that at least these two websites are saying that the fair value of Palantir stock is less than its market price currently. So if one is looking to get into Palantir, it might be worth waiting a little bit longer to see if that market price gets down to what the fair value price is considered. Of course, as I explained earlier, the market price can be affected by lots of different factors. Certainly rising interest rates can affect the market price, and good news or bad news certainly can affect the market price. So another investor may think it's worth getting in a little bit now and then waiting to see if the stock price comes down even more, where they can purchase more at a discount. Feel free to leave some comments about what you think your opinion is. I actually read an article today by someone who felt like the fair value for Palantir based on their analysis is $5 per share. Again, feel free to comment, is it worth more or less than its current price? Of course, there are plenty of analysts out there who are saying that its price target is significantly more than its current price. As for me, I like the company, I like the stock. I have been purchasing some as it's come down. I'm going to wait and watch and see if it comes down a little bit more towards those fair value targets, at least that $15.22 range. Please share this information with a young person in your life. Make investing a family affair. Have some fun with financial discussions with your nephews, your nieces, your grandchildren, your children, your grown children, etc. Until next time, enjoy your investing.